Let me introduce our first keynote guest and my first fireside chat guest here, Trevor Hall. Trevor, turn on your camera, join us here. It's great to see you, my friend. Good morning to Denver. Thanks for joining us. How are you doing, buddy?
Guten Tag, mein Freund.
Guten Tag. I mentioned it in the intro. Trevor is the host of the Mining Stock Daily podcast. It's probably, and we don't have numbers on this, but you're probably the #1 podcast on a daily basis in the mining space and the junior mining space. In particular, you go through the press releases of the day. You give us a great start in the morning. I always listen to it when I'm in the car on the way to work, actually, because you have a head start of an hour to me. So, and I always tip my hat because you're in the office at 5 a.m. Denver time, which is 4 a.m. my time. That's absolutely insane. So I really appreciate your time this morning for joining us to run through this. You're US based. That has an important input as well. Trevor, run us. You prepared some slides for us as well. Why don't we start off with that, and then we'll have a healthy discussion about what's happening.
Absolutely. Good morning and good afternoon to everybody. I know there's a lot of Germans in attendance right now, so I do want to say very much thank you, and may the world continue to bless the likes of Timo Werner, Tony Rudiger, Kai Havertz, and of course our good friend Thomas Tuchel. Obviously, you can tell I'm a Chelsea fanatic, and so thank you so much, and for giving us our friend Captain America Christian Pulisic all the best training in the world as he made the move over to the Premier League. So I am still glowing over, even though I think it was a month ago we won that thing. So thank you so much. There's so many different angles you can take this, and what I wanted to make sure I didn't do is give you an idea of where things are going to be, because I do not know. And if anybody says they know what the price of copper or the price of uranium or where the fundamentals are going to be by the end of this year or 10 years from now, I would turn around and run away. But what I can tell you is some certain things that I think you should be interested in following as we continue to progress in these markets as it pertains to future metals and really the next stage of energy and infrastructure. Real quick, Kai kind of mentioned it before. So my podcast is called Mining Stock Daily. We do get a morning briefing out about 1 hour before the US markets open, which is 8 to 10 minutes long, of just some of the more important news that has come out of the day at that time of publishing, that people who are speculating in the junior resource and mining markets should be paying attention to. We follow that up with market commentary and corporate interviews as well throughout the day. So we publish anything from 2 to 5 episodes per day. It's a lot of work, and there's a lot of stories to follow. In the past couple, in the last year and a half, we have been following a lot of the macro fundamentals of markets on a global scale as well, because I want listeners to understand what is going on in the world that can drive metals prices and hence valuations of juniors and miners. You can find us on almost anywhere you do get your podcasts. So we are published about 12 different networks, podcast networks globally. Unfortunately, we do not have a German translation. I do apologize about that, but we do get some audience from Europe and Germany as well. So if that is something you are interested in, I'm sorry, you have to go to Kai, and maybe Kai can translate it for you. You can find us on miningstockdaily.com. That's a website where we published transcripts of the news briefings. And then also you can go find the episodes from the week as well as it goes. So every week we refresh the homepage of the episodes we publish throughout the week. Okay, so really what I wanted to try to share with everybody is balancing expectations of where we are in this market as it pertains to not only the base metal complex, but future metals and what we need for the next round of infrastructure and energy. And obviously, we have seen quite amount of volatility in the past week. Started last week, we saw a pretty good dip in all commodities, not just the metals. But we saw this kind of retracing happening prior to the Fed meeting, and then that market really sold off following and in through the later days of the week last week. So sticking with fundamentals while understanding the volatility is really what I wanted to hit home. You can address the current volatility in the metal space, but there's three things that I really want you to, if there's these takeaways, if there's three takeaways that you should take is understanding the inflation expectations, the supply demand fundamentals, and then obviously we can't talk about the base metal and energy metal complex without mentioning China because they're obviously a great player. So let's start out with the inflation expectations. Yes, as an American, we do love The Simpsons, so why not put an image of The Simpsons up there as the jury? Because the jury is still out on whether this inflation is transitory or not. I happen to be myself, my opinion is that we've seen some higher CPI prints in the US. I don't see any reason to believe that those numbers are going to come back down to earth to where they were. Just seeing on, being an observer of restaurants raising prices to meet uh, to meet their costs. Obviously, everybody wants to point towards the used cars and lumber sectors to say, well, this is transitory, but everything else is rising. And so I'm in the camp that this is not transitory. So that means that the next few months CPI prints here in the US are going to be absolutely crucial to get a better understanding of how inflation is going to be in that transitory realm or not. Be careful of the word transitory. When we saw hyperinflation in the 70s here in the US, you could say that was transitory as well because it only lasted a few months. So just be careful with that definition of transitory. Prices are coming off the highs, but where will they find a new floor? I think that's my question. We will see prices starting to come down, but I don't find that I'm curious to where they will level out and find a floor. And I expect those prices to be higher than where they were, say, a year ago. So let's take a look back. And I know we're covering a lot of metals in this discussion today. So I'm going to stick with the basics. We're going to talk about zinc, nickel, and copper here. Obviously, copper is the big one. I just wanted to I think it's important to take a look back. Here's a 5-year chart of both the zinc spot price and also the warehouse stocks. Zinc has been fairly volatile. I guess you can call it. It's been in kind of a wide range the last few years. However, the warehouse stock levels here, it's interesting that where we go from here is I'm curious if the price does, or excuse me, if the levels do fall in London. We're starting to make that trend, but we will see how things come up. It's also interesting to note here in nickel. Nickel on a longer time scale continues to move higher. It's making higher highs, higher lows, and we continue to move higher. Obviously, nickel is a big player in the new energy transition. Also, if you will notice here, as of late with the London warehouse stocks, those levels have started to turn and come down as well. So that's one I'll be looking forward to watching as well. Now on to the big boy. Let's look at copper. Obviously making incredible moves here in the last year following the pandemic in March. But we see a continued downtrend in warehouse stock levels as well. We talk about this quite frequently with a few specific guests here on the podcast. There is reason to concern about how much copper will come into the warehouse based on what is in demand and can be consumed on any given month. Obviously this is the big one. So be reminded of the copper cycle. Like every metal, copper runs in cycles. Copper prices can follow economic growth. For example, the Chinese building in early 2000s was a big cycle, and the post-Great Financial Crisis growth cycle obviously was a big move higher in copper. And then in this last year, post-pandemic copper cycle. This has the fundamental makings of, I believe, a much larger bull cycle than what we had previously seen, even larger than in the early 2000s, for a number of reasons I'm going to get into, such as more fiscal stimulus. There's now multinational implications for infrastructure spending, not just on the backs of China. And there is this push towards green energy, higher demand with less supply. So supply continues to be hindered because of a decade lost in exploration, dwindling head grades in copper, and current generational mines. There was a lack of capital spending over the last 10 to 20 years, and new projects coming online. Yes, we have a few big projects coming online, not enough to feed the need. Obviously, we need more, and those projects take a long time to not only get financed, but built it onto production. For example, we talk about the supply-demand gap, where we expect supply to be in retrospect to demand. A lot of us, I think, have seen those charts. To put a number on it, some analysts think there's going to be an 8 million ton per annum gap between deficit of supply to demand by the end of this decade. So supply and demand fundamentals have never been this prevalent. We got to talk about China, obviously, and there's been some talk about China unloading some of its metal stock onto the market as of late, especially when they put copper back onto the market. This is the first time since about 2005 that has happened. So I just wanted to highlight, part of this because of the cycle. I think it was an overreaction in the market with just how much China could put on the market in 2005. If you see this little block, that was about it. And so in retrospect, based off this following move here of recent and China putting copper back on the market, we are literally just coming back on this continued uptrend trend line. We've hit that. So we will see what things go. City estimates that China's state reserves currently stand at 2 million tons of copper, 800,000 tons of aluminum, and 350,000 tons of zinc based on past purchases and sales records. City says their base case is for total volumes of aluminum and zinc selling to be around 2% of China's annual demand, or around 770,000 tons of aluminum and 140,000 tons of zinc, and for the copper volumes to be minimal. So when I hear news like that, it is kind of gets to the point in my mind, I feel like this move down in the commodities complex was very much an overreaction. I just did highlight some of these cycles where the bull cycles did restart from time. So obviously we see this little correction where China put copper back onto the market. This was the great financial crisis move in 2008, but obviously continued to move up to then all-time highs. We then kind of moved down from there, ran into a range here. This is obviously the pandemic crisis of 2020 and the winter and spring of 2020, and this obviously is where we have been since. Let's see. So this was just the headlines of China putting in, releasing some of their metals into the price to stabilize the price. We'll see how this kind of plays out, but on a technical chart, it seems like a decent place where it should have bounced anyways, just based on the trend. It could come back down lower. I'm not playing because I'm still looking at this from a long-term perspective. There's many articles out there that says why China can't stop the rally in copper. We have asked the question many times on this podcast, do you need China for this next leg up in not only copper, but the base and energy metals complex? And then some interesting geopolitical news coming down the pipeline. Obviously, the G7 was up in Cornwall, UK, 2 weeks ago, I believe it was. There was some interesting discussion between those head honchos of those governments talking about how to kind of tame China's continued growth. Lots of spending is on the table. There's news of $6 trillion proposed infrastructure plan from the Biden administration here in the United States. And not all of that obviously is going to go strictly to hard build infrastructure. There is some social and economical stuff in that proposed plan as well. So best to look carefully at what those are being proposed. I don't know if that will pass in total. Probably not. There is a standstill here. But the reason I pose this is because, as you asked the question, do you need China for the next bull run in the commodities complex? It's interesting to pose that question because in the early 2000s, obviously everything was on the back of China. Now you have all these developed countries in the G7 really yearning to continue to build, continue to increase their supply chain and catch up, or at least hinder China's growth. It's going to take not only a lot of building, a lot of planning, also going to take a lot of money and a lot of demand in metals that just isn't currently in supply. So just again, continuing to look forward, long-term perspectives. Really enjoyed this headline: global refined copper demand rise by 31% by 2030. We've seen the big price headlines from the likes of Trafigura and the other commodities traders putting a 15 to 20,000 dollar per ton price on copper. We'll see how that all plays out. So there's a lot to take in. Headlines, volatility, I think in the long run, take with a grain of salt. Those are some of the things I think you should be paying attention to on the global scale, on the macro scale, from inflation to the geopolitics, to everything else within the supply chain fundamentals. Just because we had 1 week of volatility doesn't negate the long-term bull case for copper and the base and energy metals market. So if you have any interest in contacting me with any questions or just conversation, I'd love to contact with new people and connect with them. There's my email. Also, I provided the website. Please follow me on Twitter, Trev A. Hall. Kai, I know that's kind of a rundown. There's a lot to take in. So you and I could probably talk for the next 4 hours. And I mean,
there is a lot to talk about, and a lot to digest. Just the China thematic as well. And there's you mentioned the auction that China is hosting on July 5th and 6th. Actually, they're selling only 20,000 tons of copper during that auction, right? So that's minuscule, and copper reacted quite a bit. But also, like, how much of a hype did we see in the copper price? It reminded me a bit of a Bitcoin hype, to be honest. And I don't want to throw that in here, but there was a lot of emotion in the copper trade, wasn't there?
Well, think about all the volatility in the major moves we've seen, not just in Bitcoin, but in all the markets. I think this latest move in copper was very similar to what we saw in cryptos and major tech. Lots of speculation, lots of money flowing through, pulling that price up. So that pullback really is warranted. I would not be surprised to see a further pullback in copper. In fact, I would warrant it. We saw the same thing in gold, right? So last summer, gold really moved up, and then we saw this grueling correction that lasted 9 months. It could happen in copper, but the thing is that the supply demand, it really is going to depend on, it's really going to depend on the amount, how much companies are willing to buy it for production while putting the cost onto the consumer. So that's that inflation story that you got to be aware of there, because the psychology of inflation, I don't think is completely set in. I think the willingness of people coming out of the pandemic to spend more money on the things they want or want to do is still here. But that psychology of, I'm not willing to spend that much yet, has really set.
It's an interesting discussion, because whether it's inflation or value add, like, that's the discussion I'm having with myself as well. For example, EVs are generally still more expensive than internal combustion engine cars, right? If you look at it, the Ford F-150 Lightning is the first one that seems to be somewhat competitive on a mass market scale. We'll see how that plays out. Like the GDP to debt ratio, and you mentioned inflation and those things. Like GDP, like how do you increase GDP? For example, one of my opinions is you increase the value of the goods you're selling, right? So you value add. So the whole supply chain moves in country as well. What do you see in terms of trends there in the US already? I know there's a lot of talk about infrastructure plans, but is there anything in place already?
It's a mess. It's a mess. And I tell you what, because even this morning there was word from the White House advisor that they want to strengthen supply chains. But on the metals side, so you have the Biden administration, President Biden, coming out and basically making a left-hand turn of things he said during his campaign, that he was going to support metal supply chain coming online by approving new mines. Well, they have not approved any new mines. They've actually made things harder, doing more environmental studies on the likes of Resolution Copper in Arizona, which could supply 25% of the U.S. copper demand. And then also the, I think it was the Twin Metals mine in Minnesota, which was under environmental review under the Obama administration. That process was negated under Trump, now put back in place under the Biden administration. So the Secretary of Energy, Ms. Granholm, she says some pretty positive things about understanding what the supply chain really means and how the U.S. can really be its own supplier of many of these metals. But then the bureaucracy sets in. And when politicians, unfortunately, try to mine more votes than they do metals for the supply chain, they are trying to balance that supply chain demand, but also with the people that vote for them and their constituents and conservationists and environmentalists. So it's really quite a mess. On top of that, you're also seeing news, I think it was 2 weeks ago, that the Biden administration is looking towards Canada, Australia, Brazil, and even countries in Africa to bring in these metals, because it's almost, they want this perception like they're leading this new green energy development plan, but they do not want the eyesore of a mine to get that supply to where it is. So they want, basically, they're willing to get that supply, raw material supply from other countries, bring it in, and then build those batteries or whatever it is here. I guess my continued question is, what's the difference between an open pit mine in Malawi versus an open pit mine in Arizona?
Beats me, to be honest. It's the not in my backyard mentality is not a helpful one in that regard.
Yeah,
right?
And I'm very much a conservationist, environmentalist myself, but obviously I've done years and years of research and understanding of how this industry works and the supply and demand side of it all.
And that's key, I think, because everybody's coming out with these statements of goals and achievements by 2025. I just read this morning, like Bloomberg says, Germany is going to sell 40% of its of the total car sales is going to be EVs. So that, by my calculation, it's 1.3 million vehicles, for example. That's an insane number of cars, and that's by 2025. That's like 3.5 years from now, right? That's a massive number. But we don't have the raw materials, or companies saying they're going to electric by 2030. California banning new internal combustion engine cars by 2030 as well. Like, nobody looks at the supply side. Like, the demand is there, I think. Like, the companies want to do the right thing, but nobody's going downstream. Like the SPACs, for example, we've seen, like, I've only seen really one SPAC deal, for example, that went into Mount Pass, which is I think MP Materials is a US listed company that somewhat looked at the value chain. Okay, we got to go downstream and start producing raw material. Do you see a trend there? Is that because I see more companies going into charging stations and things like that, but nobody looks at where they're actually getting the copper from for their charging cables?
Well, I mean, I do think you see corporations and companies trying to hack a little bit of that supply chain flow that we had known. Produce a metal, it gets lost through the supply chain and finally ends up to somebody who's producing the last good or the last product. So you see, great news is like Tesla doing lithium deals as of late. Those companies and those materials have done really well in their market cap and stock valuations, obviously. So I think you might see more of that from other companies, but I want to see from the major car companies as well. But on top of this EVs, like, it's interesting. We had a discussion with somebody on the interview just a couple days ago.
Trevor, we have 60 seconds, by the way.
Okay.
So
just forget the EV itself. Think about the charging cable that you have to plug in from your house into the car, and how long that is, and how much copper is involved in just that one cable, and then increase that by Lord knows how many vehicles you think you're going to sell. Just think of the cable itself. And just bring it down. It's really unreal, like where the demand is versus the supply. That's the long-term fundamental.
And I think that, like, Trevor, we could talk for hours. Like, this topic is massive. Like, even the 3.5 hours we got allotted for SF Online today is not enough. Like, there's so many aspects to this. Like, it's the ESG part, like the environmental, but also the social part. Like, where are the minerals coming from? And then the recycling part, right? So many aspects. Trevor, I really want to thank you for coming on SF Online this morning. Thanks for actually, and I forgot to mention the intro, Trevor also helped put this together. Like, he introduced us to a couple of the keynote speakers. Huge thank you, Trevor. Really appreciate it. Go follow his podcast. It's a fantastic one. Every morning I listen to it in the car to work. It really recaptures what's happening in the junior mining space. Some fantastic guests. I love your macro interviews, Trevor, because they open my world as well. I open my thinking to a different thinking as well. So I really appreciate that. Trevor, thanks so much. And we'll chat later.
Yep. Thanks, guys. See y'all in a few hours.